Okay, good Saturday morning. Let's get Crash going. Crash is kind of difficult in the sense that Yieldmax doesn't even give you the holdings. They show you an image of the holdings, but when you download the holdings file, you get PayPal. So I'm able to construct this, but it's extremely a lot of work. So please like and subscribe if you're interested in this. Otherwise, I may drop this at the end of the month. And yet, I love the idea of having a bearish fund, and I've pretty much got down the methodology and what to expect. It's just Yieldmax is not doing their job on giving you all the information. Like on the holdings, now that their holdings have gotten larger, they leave out the cash, right? So in order to find the cash, I figure out everything else and I look at net assets and I subtract that and I figure out the cash, and then that tells me the share count, which if they were doing holdings, they would show the share count. So I'm able to figure out how much cash came in and then see that a creation unit on 25,000 shares was added. So anyway, it's a lot of back ending into the results instead of just having it. Luckily, they are doing the intraday posts, so I have those. So let's look at what they did, and then I'll share that with you. So a lot here, right? So you guys are probably used to when I started using yellow to note what I added. But when they do synthetics here, their synthetics are buy a put, sell short a call, right? So basically they came in here on the 180s and they added 23 contracts, right? So they bought a 180 put and they sold short a 180 call. That's the way you do a bearish short stock mimic of the underlying. And then, not unlike the long stock, they sell short a call here, which I refer to as a naked call. This would be a naked put. So they sell short 23 contracts for a 517 at 162.5 for Tesla. So these groupings constitute, you know, what we think of a 3 in a long stock. This becomes 3 in a short. Well, ironically, they bought back the 165, right? So they bought back the call that they sold. And they sold the put that they bought. So this was closing out the 165 of the on the 180s, but they added 23. But what they did was they came down here and they bought a put and sold short a call for the 170 out at 719. And so they now have 23 left on the 180s because they put those on. Otherwise, they bought them all back. So that in itself is a little strange. But and they lost money on the ones that they bought back because they got capped. It ran below, too far below what they wrote the 180 put for. Got all the way to 168, so I think they had to buy it back for 9, and I think they only sold it for 3.7. So they lost some money on that, but otherwise it's doing pretty well. You know, this Tesla is moving down in the channel, and then they had some buy. This is the buy to close I was talking about at 6.6. They sold short some more 162.5. So overall, I love the idea of the bearish, as I've said, but make sure you guys like and subscribe. I know if I don't get a lot of viewership and comments and other stuff, I'm definitely going to drop this at the end of the month, because maybe so many people are just long Tesla or you're buying different kinds of puts, right, without buying this fund, which is kind of ironic because that would mean that you love being in the Tesla long fund, which has gotten killed for so long but had decent income, and you're using other family of funds or other put methodologies. So anyway, to each his own. So let's take a look in here at the tracking and the underlying. So what did Tesla do? Well, Tesla went down 2.04%, right? From 171 to 168. And we went up 0.5%. Okay, you always in this fund will go up when Tesla goes down, right? Because this is a bearish. Now, what you would like is to match it, right? But when you're somewhat capped on your put, you know, which is a difference. People are used to being capped on the calls, but this fund uses puts. And so they didn't do as well on that. So there were several trades here. Let's go in and look at the synthetic, the 180. So that actually, when they sold the 165 of these guys, they did really well with that. It was just one of the individual calls. But on this 180, this should be 12. Yeah, 168. So they did very well on this, and this is the 23 that they added today, right? So they basically, with this minus 165, took these off the board. So we're now sitting at 166,000 minus this money here, right? This 23,000. So when we look over there, we're looking pretty good. So we've got another booked gain here, but let's look at payment for just a second. So we also cleaned this up. We weren't having much income here, but we're getting closer to having income. We've got an 8-cent loss, but the synthetic now is showing a 75-cent gain. So this thing's starting to come together. The reason this has a loss and it's narrowing is because of the hit we took, and I can show you on May, right, where we closed this trade out. This 180 put, and they just ran by it. So I'm pretty sure this was the right price. I know at the very beginning it was hard to know their prices, so I could be off on that one. Subsequently, I've been getting all the data correct. Like I said, except for the fact they don't show it in a complete holdings. You just have to read the holdings on the blue screen. And the problem with that, now that their trades have gotten, or their holdings have gotten bigger, they drop something on the bottom. So I don't know why. I've written them. A couple of my viewers have written them. And every time you click on holdings, you get PayPal. So obviously something is messed up there. But as we go through this, they're getting better. I'll give them that. So on the weekly now, they hold, and I broke this into two categories, completely different, right? So they have these long dated calls, and every time they put on a synthetic, like up here with the 23, besides doing their individual put, right, this is buy a put, sell a call, sell short a call, and this is sell short a put, right, that's sort of the naked one that matches the synthetic. Then they come out and buy what I would call a protective call. And so there's really a force sequence that they end up doing when they put on synthetics. Now they didn't on this one, right? They chose a 170, and then with the 165 count, they went out and did the 180, but they really didn't add a 265 call to that one, right? They only did it to the 23 up here. So kind of interesting. So what these are, as a reminder again, these pretty much are always going to lose money until they don't. I kind of love that saying, right? So they buy them really cheap, and they're out there as far as the synthetic. And that way, if this Tesla just runs like crazy, right? They sell a 180 put, and say Tesla runs to 300, okay? So it's gonna cost them $120 at settlement to buy that put back, right? That's 120 times however many contracts times 100, which is the share count. So another protective way here is they buy these really cheap, long-dated calls. And let me show you on the May where they've done it several times. Just look for 265 here and the strike price. Yeah. So the first time they did it, they paid 14 cents going out to 7.19, right? They bought 135 contracts. Then they came along and they bought 30 contracts, and it cost them a little more, 57 cents, right? So that gives them the 165, and then they did another 23 today. So we're not talking about a lot of money, 1,890, 1,710, and 1,196. But let me explain that to you again. So you sell a 180 put, right? You want the stock to not run like crazy. Or sorry, you bought this put, right? So you do not want it to just run like crazy. So they buy this call, and the idea is if it runs, that's going to end up being in the money. But they go way out there to 265. So that will help them because they sold the call as well, and they're bound to get, they could get hurt. So on the call is where they would get hurt, because if you look here, selling a put, right, is a bullish bet, but when they sell the call, they're betting bearish. And if the stock runs like crazy, then they're setting on those 265s. So it can make up for them. And it doesn't cost them a lot of money. So it's just another way to protect themselves. Let's look at our weeklies. So we're now, I didn't update this chart, but we're looking at 168 here on the chart, right? So this is 171. So we've come down a little bit, middle of the chart channel, right? But like I said, if the market turns bearish, I can easily see Tesla getting down to 100 again, sort of double bottom at 100. It was there some time ago. But again, it could break out. But I just think in this environment, everything's going on, that I see a lot more downside than I see upside for Tesla. I know as popular as it is as a stock, people aren't going to like hearing that. But I always give my opinion. I'm not afraid to do that. Okay. So on the payment, let's go over holdings just for a minute. So this is what I was talking about, sorry, on May, where I follow the cash out here. So we've gotten better. I figured out that they added 25,000 in the creation unit because the cash was sitting here, and when I calculated the share value and roughly what kind of much cash that would give them, when I added all this up, it didn't make any sense to get to the net asset value that they're showing. So when I added, the amount of cash, it got us to where I needed to be here. And the same thing happened when they added 25,000 here from 125 to 150. So that's what's happened. They've added, and that's why they put more trades on in addition to just rolling, right? They weren't making money on that 180 to what they could have, so 170 was a better fit because we're already down in the 160s. They don't need to be so far out. And then they're choosing, unlike, they write 517s and 524s. They're not afraid in this bearish fund to go out, whereas most of these other long stock funds, they're typically just doing 1 week at a time. Sometimes you'll buy one back 2 days into a week because it's dropped, and you'll sell the following week with 8 days. But this 524 was sold, some time ago, when you had all of 517 week plus the following week, right? So that's interesting. Other than the anomalies, it's really starting to come together, and I see where this thing can pay money, right? And moving in the right direction. So this is positive. Like I said, I think it would be interesting for you guys. I know I chatted with a few of you about it. Buying both, right? Buy 100 shares of TSLA and buy 100 shares of Crash, and see if you get your payday without much NAV erosion. Because you really don't have to have that much NAV erosion if you have minor movements. It's the big movements that create it. So on this one, we've also got a gain. Did I update this? Yeah, 3,300 on this one, and we've captured a little bit except for this one. This one we wrote the other day, yesterday, and we wrote it on the 524, so we're a little under on this one, but it's 30 contracts. On this one we've captured almost 8%, right? We collected 20,790 and it's dropped down to 19. And this guy we just wrote today, but it closed with a little bit of a gain. And on these, you're going to lose money, right? On these protective calls. It's like insurance, Insurance is there for a reason, but you don't make any money when you buy insurance. It's only if you have a huge loss, and they end up giving you enough money to hopefully rebuild your house or whatever you're insuring. Okay. So this one's closed out. That money's in the bank now in the 180, except for the brand new 23 contracts. And that shows up in your payment. We've got 143,000. So we've got 75 cents in total income. We just have so that's really 83 cents. It's just that we have an 8-cent loss on our short call income. And I expect that to start going up. Okay, so that takes care of Crash. Don't forget to like, subscribe, give me some comments so you motivate me to get through the month on this one, and then I'll make a determination. Okay, guys, again, this is not financial advice. I'm not a financial advisor. This is for fun and education. All right, have a great day ahead. Bye.